Welcome back. You're still tuned into Market Fatafat right here on ET Now, and this is a show where we take you through all the stocks which are buzzing in trade today. And to discuss exactly that, we now have Mr. Laxmikant Shukla, Technical Analyst, Institutional Research at Yes Securities, now joining us. Laxmikant, thank you so much for taking your time out. And Federal Bank, that's the first stock on your list today. Tell us, why have you spotted this for us today?
Good afternoon, Shesha. So, talking about Federal Bank, this stock has already made a strong base near its previous key support areas, and then after we have seen consistent upside move in Federal Bank, now it is consolidating near its previous swing high of 203 to 205 zone. So overall expectation is on the upside till it hold of the levels of 190 to 197 zone. So we could expect upside move in Federal Bank. So one can buy this stock around the current levels and can expect upside move toward the levels of 214 with the stop loss of 194.
To watch out for on Federal Bank, but before we move ahead, let's go across and listening to the word coming in from Gautam Shah, who is very bullish on banks because he believes that banks can single-handedly drive the market higher. And let's go across and understand what's the rationale behind his bullish view.
Leadership is clearly with financial services. I think every time I've spoken about it, we've always had a bullish stance, and the way the bank Nifty has come back to test levels of 56,000 to test new lifetime highs as to sustain there, and the way some of the top banking stocks have behaved in the recent past, I think it's amazing because it just tells you that the banks can single-handedly take this entire market higher. So I still feel that the leadership is with the bank Nifty, and my eventual medium-term working target for that index is about 60,000. So there is another 10% to play for. So if the index moves 10%, you can expect stocks to do anywhere between 12 to 20%. So that's where you need to be seriously committed into. For now, the private banks, we can move to the PSU banks once there is a pickup of momentum.
That's the word coming in from Gautam Shah. But Sunfarma, that's the next stock on our radar today. And Sunfarma, after reporting its numbers, the stock, Gaurav, has recovered significantly from the lowest point of the day.
When we talk about Sunfarma, a little bit of mixed set of numbers is what we saw from the company, because when we look at revenue and the profit, that is actually below the street's expectation. But on the other hand, when we look at EBITDA margins, we saw a beat in that number. Now let's understand the numbers. When we look at revenue, that is up almost by 8%, while EBITDA itself increased almost by 22% on a year-on-year basis. And as a result, when we look at EBITDA margins, we saw an expansion somewhere in the range of 330 basis points. When we look at geographic mix in this result, we saw US and the rest of the world sales were actually below the street's expectation. But on the other hand, when we look at India's sales specifically, those were perfectly well. Lastly, when we look at some of the other points, company has now said that the sales of API were at around up more than 28% on a year-on-year basis. What they are talking about R&D is that they will continue to invest in R&D. But at the same time, when we talk about some other announcements, what they are saying is that they are actually looking forward in specialty business and becoming a player in that specific segment. As a result, when we talk about stock performance, it was actually down, but now it has recovered a bit. But definitely on the back of the good set of commentary, we are watching out on this stock.
Okay, so that's the reason Sunfarma is in focus on the back of a weakish set of earnings coming in, and the street reflecting that sentiment as well. But C.S. Muralidharan, the CFO at Sunfarma, says that they expect the US specialty business to continue its growth. Let's go across and listen into what more he had to tell us about the growth outlook going ahead.
So US generic pricing environment continues to be competitive, and it's also quite product specific. The government there is also trying to control drug prices through actions like Inflation Reduction Act and the PBM reforms. However, if you see that our overall sales in the US for Q4 was approximately $464 million over Q4 last year, while there was some pressure in generics, but our specialty business continued to grow. So we are not giving any specific guidance on margins. We will continue to invest in R&D to build a strong product portfolio. At the same time, keep a focus on cost efficiencies and operation efficiencies to remain competitive and aim for improving profitability.
That's the word coming in from the management of Sunfarma. Let's also talk about Dyani International. It just reported its numbers an hour ago, and losses have widened on a year-on-year basis, because of which we saw that sharp downtick after it reported its numbers. But the stock since then has recovered over the last half an hour or so. Revenues came in at 1,213 odd crores, which is an uptick of 16% on a year-on-year basis. Margins too have expanded to 15.3%, versus 12.4% that the company had reported same time last year. But as I mentioned, losses have widened to about 14.7 crores versus a loss of 7.5 crore that the company had reported same time last year. But the stock has recovered significantly from the lowest point of the day and now is sitting with gains of nearly 0.6%. Okay, so that's the reason Dyani International is in focus. It's an earnings candidate whose numbers have come out recently. But Laxmikant, you've picked out NMDC for us on the charts. When I pull up the charts, last 6 months the stock is lower by 4%. Last 1 year as well, the stock has not done anything. In fact, it's given an 18% lower return. Tell us if you believe the consolidation is behind us, and now can we expect some up move on NMDC?
See, in yesterday's sessions, NMDC has surpassed its previous swing high of 70 mark, and then after it has also closed above the same. And even if we look at the daily charts of the NMDC, from where it has given the double bottom breakout on the daily chart with the formation of bullish candle. Even RSI is trending higher. Now it is trading above the levels of 65, so which is again showing positive sentiment. And even we have seen positive crossover in the strike stick. So all the indicator and oscillator has given positive sentiment for this stock. So overall sentiments looks on the side of the positive side. So we could expect that this upside momentum will continue in the NMDC. So I think current level would be the right level from where one can buy the NMDC stock and can expect upside move toward the levels of 78, where we are expecting our target. And one can keep the stop loss of 69 in case of any pullback move.
The positive view coming in on NMDC, 69 is the stop loss that is recommended. But TVS Motor, Rabinder, why is this stock in focus today?
TVS Motor has signed an MOU with OR Caps Private Limited, which is a technology-driven mobility platform to supply 500 TVS King EV Max electric three-wheelers during the financial year 25 and 26. And this strategic partnership is aimed at promoting sustainable urban mobility across Tamil Nadu. And as a part of this initiative, OR Caps will deploy the vehicles for eco-friendly intra-city passenger services, beginning with Trichy and progressively expanding operation to Madurai and Coimbatore. And the integration of these electric vehicles into the OR Caps fleet reinforce both companies' commitment to cleaner, more efficient transport solution. But stock is not reacting positively on the back of this news, and stock is down approx 1%.
Okay, so that's the take on TVS Motor and why that stock is in focus. Laxmikant, coming to you, MCX is the stock that you've picked out for us. Tell us what are the next key levels you're watching out for on MCX, and where are you seeing some upside, if at all?
See, after 3 days of decline, this stock has rebounded after testing its previous swing low of 6,250, and this stock has been trading above all its key moving averages since last few days also. But due to the profit booking, we have seen some kind of retracement. But today it has come up with the strong upside move. So we expect that this upside move will continue toward the levels of 7,080, and till it hold over the levels of 6,180, we could anticipate this upside move toward our target.
On MCX and the levels to watch out for on that front, let's move on and talk about another earnings candidate. Lots of news flow also coming in for GMR Airports, lots of announcements with their earnings. But first up, if you take a look at the earnings, the company's consolidated net loss has widened to 252.6 crores this quarter against a net loss of 167.6 crores reported in Q4 FY24. The loss has widened. That's the reason why the stock is also taking a cut of 2% today. Revenue from operations has gone up 17% on a year-on-year basis to 2,863 crores. And during the fourth quarter, EBITDA also stood at 1,123 crores thereabouts, registering a growth of 19.4% on a year-on-year basis. Now onto the announcements front, the company has successfully concluded the purchase of a 10% equity stake in Delhi International Airport Limited from the Fraport AG Frankfurt Airport Services Worldwide. The transfer of the shares and exchange of consideration has been completed, as a result of which the company's shareholding in the Delhi airport has increased from 64% to 74%. Meanwhile, GMR Airports in its release also said that GMR Hyderabad International Airport, which is a subsidiary of the company, has entered into a share purchase agreement to acquire 70% stake in its associate company ESR GMR Logistics Park as well. So lots of news flow, but because net losses widened, that stock is lower by 2% as we speak. Well, absolutely. But let's get to noon. The stock is holding up with gains in excess of 1.5% today. Tell us, what do charts indicate for Naukri or Info Edge?
See, few days back, the stock has given a consolidation breakout on the upside, but on 16th of May, we have seen some amount of retracement. But today it has found some sort of respite near its 50 DMA while reclaiming above 100 DMA with the formation of bullish candle. And even RSI has given positive crossover with inclining histogram on the MACD. So we expect that a bullish move in this stock from the current levels, and one can expect the upside move toward the levels of 1,550 with the stop loss of 1,430.
The levels to watch out for Info Edge. But viewers, we'll slip into a very short break on this edition of Market Fatafat and be right back with more buzzers. Welcome back. You're still tuned into Market Fatafat right here on ET Now. But JSW Steel, that's the next stock on our radar this afternoon. We are expecting good set of numbers, Gaurav, from this particular company on a sequential basis, isn't it?
Well, yes, when we talk about JSW Steel, we are expecting good set of numbers in this quarter. And in fact, when we talk about stock performance also, it is up in trade today. And the reason being that when we look at the estimates now, revenue is likely to increase almost by 5% on a sequential basis, while EBITDA may increase almost by 15%. On the other hand, when we talk about profitability, we are expecting profitability to double on the back of the low base that we have seen in the last quarter. And the reason being that why they are expecting a good set of numbers is that it will be specifically driven by volumes is what estimates are saying. They are also saying that the realization is likely to remain flat, but on the other hand, coking coal cost is likely to be something which will aid the benefits on the spread side, and that is the reason why profitability is also likely to improve. When we talk about consolidated EBITDA, that is also likely to improve almost by 15% because of the volume growth and lower cost. What we can expect from the management is that the volume outlook on FY26 is a key thing to watch out for. How their commentary is going to be in terms of global turmoil and safeguard duty, how domestic pricing outlook is likely to remain, and how the capex and debt guidance is from the management is a key thing to watch out for. But all in all, good set of number is what we are expecting from Tata Steel in this quarter.
So JSW Steel, all eyes are going to be on that counter. Good set of numbers expected. But Ravindra, coming to you, let's keep it going with the steel counters. Tata Steel is the stock that you've picked out for us, and I believe it's on the back of a positive news flow.
Well, as Tata Steel is in focus on back of expansion, where company inaugurate phase 2 of expansion of Kalinganagar operation, and annual capacity of the state-of-the-art facility in Odisha jumped to from 3 to 8 million tons, with an investment of rupees 27,000 crore. And company has target advanced high-strength steel for sectors like automotive, infrastructure, power, shipbuilding and defense. And with the phase 2 expansion, Odisha has emerged as a single largest investment destination for Tata Steel. So back of this news, stock is up 1%.
Okay, so on the back of this news flow, Tata Steel is up 1%, but let's keep it going with Tata Group stocks then. Tata Chemicals, that's on your radar. Laxmikant, tell us, what do charts indicate for this one?
Following a few days of decline, this stock has found bottom near the levels of 787 to 800, and then after we have seen pullback move in this stock. Recently, this stock has given a previous breakout above its previous swing high of 870 with the formation of bullish candle reclaiming the 100 DMA level. So overall expectation is that this pullback move higher, and we could see further upside momentum in the Tata Chemical from the current levels. So one can go long around the zone of 875 to 880 and can expect the upside move toward the levels of 940, which we are expecting our target. And in case of any pullback move, 850 could act as the strong support for this stock.
Levels to watch out for on Tata Chemicals. But while we are talking about Tata Group of companies, let's now throw the spotlight on Trent as well, because Trent and BEL are two stocks that are in focus on the back of this Sensex rejig. Tata Group's Trent and BEL will officially join the 30-stock BSE Sensex from the 23rd of June as per the latest rebalancing update by Asia Index Private Limited. And in this reshuffle, Nestle India and IndusInd Bank will be excluded, marking a significant shift in the index composition. Trent to see inflows of approximately 2400 crore and BEL is expected to attract inflows of 2375 crore. So in dollar terms, that's $278 million of inflow for Trent and 275 million for BEL. This, of course, in terms of passive inflows. On the flip side, Nestle may face up to 1800 crores, that's $210 million in terms of outflows. Similarly, IndusInd Bank could see 1155 crores in terms of rupees or 135 million in terms of US dollars in terms of outflows. Now remember, IndusInd Bank share price has remained under pressure due to recent losses and recent accounting discrepancies also being unearthed from the company. On the back of that, Trent doing very well, up 2%. BEL also holding up pretty okay in today's trade, 0.2% uptick coming in both of these stocks that are potentially going to be included in the Sensex come 23rd of June. Several stocks in focus on the back of that rejig, but first and second quarter are usually better for quarters. For value retail, believes Bernstein India's Jignan Shugor. He still sees long-term opportunity in both DMart and Trent. Listen in to what he had to say.
While Q4 is typically a slower quarter for most retailers, Q1 does well for both DMart and Trent, and the reason is for DMart, Q1 is the coming back to school quarter, which helps their general merchandise sales go up, which is positive. For Trent, given the amount of stores of Zudio and Westside that they have added in Q3 and Q4 last year, were not meaningfully revenue accretive in the last year, and they will become increasingly higher contribution of revenues in Q1 and Q2. So because of those specific reasons, I think Q1 and Q2 will be good for both DMart as well as for Trent. And structurally, I like them because they are a very clean operating model with a very narrow focus on a customer profile and a product profile, focusing on replicability rather than breadth. And I think that is what differentiates a strong retailer from a weak retailer in my view.
Okay, so that's the word coming in from Bernstein India's Jignan Shugor, who still sees value in retail players like DMart and Trent. But moving on, Gaurav, you've picked out Alembic Pharma for us and positive news flow, I believe.
Well, yes, Alembic Pharma is in focus, and when we look at the news flow, because of the news flow, earlier the stock was actually under pressure, but now it has recovered a bit, and the reason being that now the company has today announced that it has received actually a final approval from US FDA for its abbreviated drug called which is used for one of the blood sugar level maintaining. When we talk about the pharma stock, when we look at the Alembic Pharma, now the cumulative total of the ANDA approvals is now reached around 223, out of which 199 have received final approval and 24 received tentative approval. So definitely a very positive news flow is what we can say for Alembic Pharma for the new drug that they have received. And after that, when we look at the stock performance, it has eased some of the pressure, but still in the red, but definitely watching out on this counter.
Alembic Pharma in focus on the back of this news flow, but with rising concerns over likely tariffs and rising pricing pressure, which pharma player will stand to gain the most? Systematic Group's Vishal Mansagar shares his pecking order in this space. Listen in to what he had to say.
If I look at the large cap space in the pharma, Sunfarma is one which has which probably will be doing 2 or 3 large launches in FY25, FY26, and these launches, each of these launches can be a $200 to $300 million market opportunity. So if I look at what companies can deliver in terms of growth over a 2 to 3 years horizon, Sunfarma is chasing the largest market opportunity, and they are prepared in terms of the regulatory approvals. So those are in place, and they just need to kind of execute on the commercial level. The fastest growing company in IPM is Sunfarma. They have 33% of their sales coming from India. And I think if you look at another name, Ajanta Pharma, they are also around 33% of their sales from India. Even they are growing around that 12-13% level in India. So those are the two picks I would look at, and I would prefer Sun over Ajanta.
That's the word coming in on the pharma sector and how Vishal would like to play that space. But Laxmikant, coming to you, ICICI General Insurance is the stock that you've picked out for us. This stock has been absolutely lackluster, has done nothing over the last 6 months. Tell us what's the outlook going ahead.
Since morning, we have seen that all the stocks in the insurance sector are buzzing So if we even if the HDFC Life, which is trading near its lifetime high, SBI Life has given ascending triangle breakout, and ICCI Pruli has given consolidation breakout on the daily chart. So even if we look at the chart of the ICCI Lombard, so where we have seen a strong base formation above its 20 DMA, which is placed around the levels of 1850, and now this stock has given a consolidation breakout above the levels of 1900. So overall move could be on the positive side till it hold up the levels of 1850. Even RSI has given bullish crossover with a positive crossover in the MACD also. So we expect that from the current levels we could see upside move in ICCI GI toward the levels of 2000 with the stop loss of 1850. Until it hold this level, we could anticipate this upside move toward the levels of 2000 mark.
And the levels that we can watch out for on that one. But let's talk about GSPL. This stock is in focus on the back of its earnings. Gujarat State Petroleum. The company has reported its Q4 results that were sharply lower across parameters on a sequential, which is a Q on Q basis. Revenue has come in at 238 crores compared to 260 crores, a knock of 8.5% sequentially. Net profit has taken a very big cut, coming in at just 70.7 crore rupees compared to 135.6 crores, which is lower by almost 48% on a sequential basis. EBITDA too has gone lower by 35% on a sequential basis, and EBITDA margins, very big fall coming in over here. 20 percentage points is where the stock is, where the EBITDA is lower for the stock at 52.4% compared to 73.9% on a sequential basis. Volumes too are not looking promising because they've witnessed a sharp drop compared to the previous quarter, declining 11%. When the compared to the same quarter last year, the company's volumes were down 23%. So that's the take coming in on GSPL's Q4 numbers on a standalone basis. Weak set of numbers coming in. Stock lower by almost 2.5% as we speak. GSPL, the stock is down 2.5%, but Ramco Cement, this one is also in the spotlight on the back of its results. Rabinder, how were the results?
Well, yes, Ramco Cement has reported its Q4 number, and company reported revenue at rupees 31 crore, which was down by more than 74% year-on-year basis. And if we talk about revenue, then revenue also saw a decline of 11% year-on-year basis at rupees 2,391 crore. And if we talk about margin, then company's margin also saw a decline from 15.6% to 13.4%. And company registered a total sales volume of 18.5 million tons in FY25 with the marginal growth of 1% year-on-year basis. So weak set of number of Ramco Cement in Q4, but stock has recovered more than 3 to 4% of days loss.
Okay, so recovery being seen on Ramco Cement. So with that, we'll wrap it up on this edition of Market Fatafat. First of all, thank you to Laxmikant as well as CA Rudra for joining us. On a side note, it's Gaurav's last appearance for us on ET now. Gaurav, how do you feel that it's Market Fatafat that you're ending your show with? Hope it feels good, and we wish Gaurav all the best for his endeavors ahead. But on that note, viewers, we'll wrap it up on this edition of Market Fatafat. A goodbye from Ashesha, me and the team that put this show together. Thanks so much for tuning in.